The interest rate increases which began in 2022 have had a major impact on private mortgage lending, and not only in terms of pricing. In this video, I'll explain why it's getting more difficult to qualify for private mortgages, why most lenders are not making any exceptions, and how to find out the current guidelines for various private lending companies, which are also known as bridge lenders or hard money lenders. I'm Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you are in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. When the Federal Reserve started to increase interest rates earlier this year, it obviously forced many private lenders to increase the interest rates they charge to real estate investors. But one of the side effects of the rate hikes is that many lenders have had to tighten their lending guidelines and reject loan requests that they may have otherwise accepted prior. Most lenders are only considering high-quality deals and strong borrowers. Here are a few examples of the tightening guidelines. Lenders that may have considered properties in tertiary markets are now only considering major metropolitan areas. Lenders that used to accept borrowers with a 620 FICO score may not accept lower than 700. For rehab projects, most lenders are only considering investors with lots of experience and high cash reserves. In the past, many lenders required the investors to have successfully completed 2 projects. Now that number is 10 for many lenders. Same goes for construction loans. Only experienced builders are being considered. Although there is still an appetite for ground-up construction loans, most lenders are avoiding the land development phase. Vacant land has always been the least desirable asset for lenders, and it's the first property type on the chopping block when there is uncertainty in the real estate market. The small percentage of private lenders that do lend on vacant land are likely rejecting all land loan requests at this time. In the slight chance that you do find a lender for a land deal, the maximum loan to value or loan to purchase price is likely to be around 35%. Another property type that many lenders won't consider anymore is luxury homes or any residential property that's unique and doesn't have enough comparables. Surprisingly, multifamily is also being avoided by many private lenders, but mainly the lenders that tend to focus on residential investment properties. Most of the resi private lenders also lend on multifamily, but now most of them max out at 8 units instead of the larger apartment buildings. There is a whole other sector of private lending focused on commercial real estate bridge loans, and those lenders are still bullish on multifamily. Many lenders are anticipating that property values will decline over the next 12 months, so the maximum LTVs are being reduced by 5 to 10%. For purchase loans, expect to put more cash down than was previously required. For refinance loans, you may find some lenders that are still advertising unusually high maximum LTVs, say 75% for example. Take that with a grain of salt, because most lenders will knock down your perceived value or the appraised value if an appraisal is required. I don't blame the lenders for doing this. Real estate values are falling in many parts of the country, and the market shakeup only started 6 months ago. There is a lot of uncertainty when it comes to property values, while we still have rampant inflation and rising interest rates. Whether a lender has had to tighten their guidelines or not may depend on their business model in terms of capital. The majority of private lenders in today's market fund loans using their balance sheet and sell them in bulk to the secondary market. This capital ecosystem is the reason you've experienced low interest rates for private mortgages over the past 5 years. When interest rates increased in the second quarter of this year, the secondary market loan buyers pulled their capital away from private lending because they were able to get higher returns from other investments. Since lenders have increased their rates, a lot of the capital seems to be coming back to our space. But the secondary market buyers are being very cautious. They don't want to buy any risky loans that push the limits of typical lending guidelines. And this is the reason that the majority of private lenders are tightening their guidelines. They have to be able to sell their loans in order to recapitalize and continue lending. There are lots of private lending companies that don't sell their loans and use other capital sources, including a mortgage fund, family offices, warehouse lines, individual investors, and others. Even though these private lenders don't have to conform to the risk appetite of an institutional loan buyer, many of them are tightening their guidelines as well because of the uncertainty in the market and the anticipation of declining property values. Some have told me that they are tightening their guidelines because they're getting flooded with higher than normal loan volume, and they're in a position to be picky about the loans that they fund. This video was produced in early September 2022, and the Federal Reserve is not done with hiking interest rates. It could take a long time for the market to stabilize, so I'm guessing the majority of private lenders will continue to be conservative through 2023. That said, there is still a lot of capital available for high-quality loans. If you're seeking private financing for a commercial or residential investment property deal, use our website privatelenderlink.com as a resource to find direct lenders. All the private lending companies listed on the site have a very detailed profile that shows their lending guidelines. You can contact each lender directly, or if you'd like some recommendations, click the Create a Loan Request button. Provide some information about your deal for us to review, and we'll invite a few select lenders to look at it. If you found the content in this video to be useful, please click the like button, and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.